This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms. This is Bloomberg Businessweek. Carol Massar, Tim Stenovec, live at Bloomberg headquarters in New York City. And Tim, stocks up off their lows of the session. We got a rally underway. We're talking about records again on Wall Street.
Yeah, S&P 500 right now higher by 0.4%. The Nasdaq Composite up 0.6%. The Dow up more than 0.1%. Charlie Pellet is going to have the details on that in just a moment.
He keeps us honest and up to date all the time. We're going to get to him in just a moment, as Tim mentioned. Hey, it's a big week. The UN General Assembly underway, Climate Week. We've got some great macro voices, and we're thinking about kind of the big picture. Having said that, we're also thinking about the Fed. This as Federal Reserve Governor Stephen Miran speaks on President Trump's potential influence and being independent. A conversation with one of Bloomberg's best. We'll get to that in just a moment.
Also, speaking of the president, his move to curtail H-1B visas, the potential economic impact, a huge story that is still unfolding, one that unfolded too over the weekend. Also, a view from the C-suite on them and more. Barbara Humpton is back with us. She's president and CEO of Siemens USA.
Also, another voice from the C-suite, Toby, president and CEO of EQT, on the nat gas play to fend off higher utility prices and more. We're also going to talk a little bit about AI and energy demand, certainly with both of them. First up, though, as we mentioned, Charlie keeping us up to speed on the day's trading session. Let's pass it over to Charlie.
All right, thank you very much. And here's what's going on. We've got the Dow, we got the S&P, we got NASDAQ, all advancing, all trading at records right now. Right to the numbers here. We are on track for our 28th record close for the S&P 500 index this year. S&P right now up 26, 66.90. That is a gain of 0.4%. The Dow up 60. That is an advance of 0.1%. NASDAQ Composite Index up 136, up 0.6%. The Mag 7 Index up now by just about 0.7%. 10-year at 4.13%, with the 2-year 3.59%. Gold up $61 the ounce, up 1.7%, a record 37.46. And Bitcoin is retreating by 2.6%, 112,453 on Bitcoin. And to be clear, WTI crude oil flat on the day, 62.68, but gold, no question there, a record up 1.7%. Nvidia says it plans to progressively invest as much as $100 billion in OpenAI as the company's partner to deploy at least 10 gigawatts of Nvidia systems for OpenAI's infrastructure. Nvidia shares are up now by 3.6%, and Apple shares today broke into positive territory for the year. The iPhone maker is up right now. We've got Apple shares advancing, Apple up by 3.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Gotta love it. Stocks up, gold up, crypto not so much today, Tim.
You never know why with crypto.
Yeah, really.
I think it's fair. As somebody who follows it closely, you just don't know.
You never know. All right. Watching the markets. We are also watching some commentary by members of the Fed. His first meeting, in fact, as a voting member of the U.S. Federal Reserve, on leave as President Trump's chief economic advisor. We're talking about Stephen Miran. He has begun to speak out as a Fed member, including his first public speech today in an in-depth fireside chat at the Economic Club of New York with Bloomberg senior Washington correspondent Saleha Mohsin. He stressed having an independent voice. Check it out.
I've had a number of conversations with the president about the economy, about economic policy over the last, 9 months, about the economy, economic policy. A number of those conversations have touched on the Fed also. He's never asked me to set policy in a specific way.
So
He's never asked me. It's never happened. I view my job as trying to provoke an interesting discussion that will help the FOMC arrive at clear understandings of the way the economy works and where monetary policy should be set. It's a few short months, but I've got I think a lot of content to work through in those months.
All right, that, of course, was Fed governor member, if you will, Stephen Miran, joining our Saleha Mohsin, joining them at the Economic Club of New York City. Hey, let's kind of get into it and what he had to say. Bloomberg TV and radio international economics and policy correspondent Michael McKee joining us in studio. So I want to address first what we highlighted there, Mike. Does the street believe he will have an independent voice? And on the second part of what he had to say, what is it that he wants to help the FOMC when it comes to clear understandings of the way the economy works and where monetary policy should be set?
Well, let's take those one by one. The first thing, I don't think the street sees him as an independent voice at all, which was kind of behind some of what he was saying today. And then the second part of that is that the street doesn't care at this point because he's one voice out of 19 on the committee and one vote out of 12. And there's a feeling that he isn't going to make much of a difference with 4.5 months, or not even that, on this term. Now, he could stay a lot longer and continue to be a voice for the president's views. If we want to be charitable, we can say that his views are the same as the president's, and he's not there to do the president's bidding, but he just happens to align with him, which could be true. And so as far as that goes, yeah, he's not, he can say he's not been told by the president what to do, although he certainly knows what what the president wants. Now, what he wants to do, or what he says he wants to do, is to continue to make the arguments that he made today as an economist and convince other members of the Fed to go along with his viewpoint. You noticed that Jay Powell said at the news conference last week that the real impact that anyone on the Open Market Committee has is in their ability to persuade people to their views. Now, he sort of sounded like nobody was believing in Dr. Miran's views at that meeting, but Miran seems to believe he can bring people along.
What does he view as the role of the Federal Reserve, and how is that different from other members of the Fed? I feel like we got a little bit of that philosophy today.
We did in a sense. I think he is committed to keeping inflation low. It would be hard to be an economist who supported high inflation. And he is certainly committed to keeping the labor market healthy, because much of his talk was about that. A lot of what he disagrees with is in the on the fiscal side. Which is not unusual for someone of his political party. And also in the philosophical side, he disagreed with the way the Fed picked up some social topics in recent years, although you can argue about how much they really did. And then the other part of it is that he has put a little bit of emphasis on the so-called third mandate of stable interest rates and stable long rates. And he said that that is something the Fed could do something about, whereas everybody on the Fed now, up to this point, has said that just flows from our other policies.
So can you explain that a little bit? Because for years I've talked about the dual mandate in the context of the Federal Reserve. Have I been getting it wrong by only focusing on stable prices and maximum employment?
No.
So what is with the
this has been, it was put in there in 1977 when they added the dual mandate to the single mandate that they already had. And basically it says that you need to have stable interest rates going forward, long rates going forward. And the issue is the Fed doesn't control long rates. And so what you need is low inflation and a healthy labor market, and then you will get stable and lower long rates. Now, the argument is that they could, if they wanted to, and they have done through QE, tried to influence long rates. And he would seem to think that that is something that could be considered, which other people would disagree with.
Hey, one last thing before you go, H-1B visas. We know one of the big stories, and certainly everybody reading it on the Bloomberg, about the President Trump, his administration planning to raise the application fee for such to $100,000. It's caused some concern among skilled immigrants in the U.S., including graduate students and workers in the tech industry. What's the economic case for having them? What's the economic impact of not having them?
Well, the case for having them is you bring in some of the best and brightest people from around the world who contribute new ideas and also contribute to making U.S. companies more effective and more efficient, more productive. The argument against it is that they can take jobs away from Americans. Now, the tech companies have always argued that there aren't enough Americans to hire doing these jobs. And I'm not an expert on that, but I think I see one sitting across the studio from me that you'll be talking to in a minute. From an economic point of view, there isn't really evidence that they take a lot of jobs or that they affect the pay of Americans who are here. But one of the questions that has come up is this another thing that the president isn't legally allowed to do? And is just doing anyway, and nobody is talking about it because Congress has the legal right to change visa costs and not the president, but it's sort of been taken as a given that he could do this. So I'm not sure where this goes from here.
All right. We appreciate your input there. Bloomberg TV and Radio international economics and policy correspondent Michael McKee. All right, now we do want to get to the tech sector where people are definitely talking about those H-1B visas, and we're going to get to that in subsequent hours here on Bloomberg Businessweek Daily. But we really want to get to, and actually with some of our later guests, talk about, Tim, what Nvidia is up to. Yeah,
including one detailing how Nvidia will invest as much as $100 billion in OpenAI to support the building of new data centers and the infrastructure needed to power AI workloads. The two companies signing a letter of intent for strategic deal just on Monday, they said in a statement. They're coming just days after Nvidia agreed to invest $5 billion in Intel as the two companies will co-develop chips for PCs and for data centers. We got a great group, Carol.
We do indeed. Let's get right to it. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, right here in studio. He's also the host of the Tech Disruptors podcast, which focuses on disruptive trends in the tech world. Nvidia certainly has disrupted the world. You can find it on Apple, Spotify, wherever you get your podcasts. And then also with us, the co-host of B-Tech on BTV and of the B-Tech podcast, Ed Ludlow, out there in San Francisco. Mandeep, I want to go first to you. Why is Nvidia doing this investment in OpenAI?
Well, when I look at Nvidia, clearly, they are at a $200 billion run rate, growing exceptionally well, and they have to keep up the growth rate. So now that they can't really sell to China market, or at least there's uncertainty, they have to find those avenues. And the biggest avenue is OpenAI. I mean, they still believe they need a lot of compute for training. Microsoft, it seems, has really focused on the inferencing part. So this raises up the ante in terms of model training. And just to put it in context, 1 gigawatt can cost up to $25 billion in investment. So if they're partnering with Nvidia for 10 gigawatts and all that $100 billion investment is not one shot, it's going to happen progressively, we're talking about $250 billion in costs, out of which Nvidia can spend up to $100 billion. That's just rough math.
Do they have to then, I'm assuming this is a deal where they make this investment of $100 billion and OpenAI uses nothing but Nvidia chips? Like, I'm trying to understand, is it as simplistic as that?
No. So look, OpenAI has hinted they could be using Broadcom ASICs as well as Nvidia. But the other player in this is Oracle.
Right.
So what Oracle said was they have a $300 billion deal with OpenAI, and they guided to that backlog going up, their revenue going up. A lot of that is the amount of compute that OpenAI will consume on Oracle Cloud. So the question is, where do they get the compute and the data center capacity? That's where Nvidia is coming in and saying, we're going to help you fund that data center build out. Remember, all the other hyperscalers are doing it themselves. Microsoft is doing it, Google is doing it themselves, Meta is doing it themselves. OpenAI doesn't have the balance sheet. So they need the money from somewhere. In this case, Nvidia is the bridge that's providing them.
Hey, Ed Ludlow, co-host of B-Tech, come on in here because I'm really interested in what Nvidia gets out of this from an equity perspective. We know Microsoft is a huge investor in OpenAI, SoftBank as well, not to mention many other venture capital firms. What does Nvidia get here?
Well, according to Bloomberg sources, Nvidia literally gets equity in OpenAI. But you pointed out right at the top of the conversation, Tim, this is a letter of intent for a future strategic agreement, and how it's structured is really important. Mandeep gave us the how the industry works bit, but what we understand with this deal specifically is that the $100 billion is split so that once a gigawatt of capacity is installed, then OpenAI gets access to about $10 billion. But what we don't know is like if this is cash or it's just Nvidia saying, here are $10 billion worth of GPUs. Yeah,
that's what I'm wondering. Is this just in kind? That was my first question to Carol when I saw this headline. That's a lot of money. Is this just in kind from Nvidia? Look, Nvidia has the money.
Nvidia doesn't have the cash balance sheet, though, to fund the overall project. And so, like, what's really interesting here is there are lots of companies that use Nvidia GPUs. If you were to rank them, OpenAI, based on what the reporting and the public disclosures, is probably number 6. Microsoft's probably the most. They probably have 450,000 active hoppers. And then you have Meta and xAI. But each of those has a different business model, right? Largely, OpenAI does not own and operate and control the GPUs itself. As Mandeep perfectly points out, they rely on third parties that they basically rent capacity from. And so it's a bit misleading or confusing to talk about the direct relationship with NVIDIA and OpenAI on GPUs. But for NVIDIA, you know, and I go back to the Bloomberg Intelligence React, the guy's so quick, you know, NVIDIA loves big round numbers. So does the President of the United States, the administration, and NVIDIA uses them to the same sort of effect. But the question is only whether NVIDIA makes more money out of this deal than it's putting in. And I think that's the thesis that BI has, and Mandeep can correct me if I'm wrong.
So the one thing I would add here is in the case of Microsoft's partnership, you know, if OpenAI was using Microsoft Compute for training, that would be cost for Microsoft. They can't recognize it as revenue. But if OpenAI is using Oracle's compute for training, that's revenue for Oracle. So that's where, you know, Microsoft is focused on the inferencing part because that's all revenue for them. They don't want more costs. Whereas for Oracle, you know, all the training stuff is revenue. And so it doesn't surprise me that Oracle wants a lot of that training business. And somebody has to finance the chips because it's not Microsoft or Google or Meta buying those GPUs. So in this case, NVIDIA is the one who is financing those chips and taking a stake in OpenAI.
One thing I want to throw into the, you know, Ed, and come on back in, this comes just after that Intel investment, NVIDIA agreeing to invest $5 billion in Intel. Are they connected, these moves? Is there a grand plan here? Is it NVIDIA, I think as Mandeep said earlier, about, you know, kind of building out its business or I guess thinking about what else that they need to be doing?
Yeah, I mean, NVIDIA has some financial clout, largely relating to the appreciation in its market value. But it's not a company that's like absolutely flush with cash on its balance sheet and has an infinite war chest to spend. The main thing, and we wrote about this in the context of Intel, is that NVIDIA is the golden ticket for AI as it stands, right? That it has a literal and technical monopoly in the market for GPUs or AI accelerators in the data center use case. But Mandeep alludes to something that on paper is coming, which is AMD has a product in the market. There's the ASICs or custom silicon solutions that Broadcom offers. Grok with a Q would say that it is more competitive on the inference side than AMD is. By the way, OpenAI also has an exclusive agreement with OpenAI as well, the use of the MI400 series, right? And so this puts NVIDIA in a position where it can guarantee itself some demand out on top of the backlog that's already there in the future and make sure that the future data center that gets built does so with its designs and its accelerated computing systems.
I just love how everybody's working with one another. It's fascinating. Hey guys, unfortunately we have to leave it there. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. Check out the Tech Disruptors podcast he does with the BI team. And then of course our Ed Ludlow, co-host of Bloomberg Technology. When we come back, North America gas at an inflection. We'll see what the CEO of Nat Gas producer EQT has to say about that.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We do have stocks pushing higher. The Dow, the S&P, NASDAQ solidly in the green. We have got the S&P on track for its 28th record this year. S&P right now up 26, 66.91. That is a gain of 0.4%. The Dow up 53. That's an advance right now of just about 0.1%. And West Texas Intermediate crude oil is moving lower to the higher today. Little change right now. WTI 62.70 right right now for a barrel of WTI. The 10-year 4.13%, with the 2-year 3.59%. Spot gold up 1.6%, 37.46 the ounce right now on the precious metal. Nvidia is going to invest as much as $100 billion in OpenAI to support the building of new data centers and the infrastructure needed to power artificial intelligence workloads. Nvidia shares are up now by 3.5%. And Pfizer is paying $4.9 billion for the obesity startup Massar in a bid to catch up to rival drug makers after failing to compete with its own weight loss medications. Right now, we have got Pfizer shares. They're gaining by just about 0.5%. As for Massar, it is surging now by 62%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Bloomberg reported over the summer that businesses and households served by the largest U.S. power grid will spend a record $16.1 billion to ensure electricity supplies amid a massive artificial intelligence-driven demand surge. We are talking about this a lot. And having said that, we just talked about what Nvidia is doing with OpenAI and their spend. That price increase, though, prompted calls from utilities and energy groups to build more generation. So we want to see what our next guest has to say about it. He is in the midst of it. Toby Rice is president and CEO of EQT, the nearly $31 billion market cap vertically integrated energy company, obviously specializing in nat gas. Toby, good to have you here. I want to start big and broad, the macro. How would you describe it right now for you in your business?
Natural gas markets, in one word, I would say it's going to be very volatile in the short term. And one word for the long term, I'd say incredibly exciting. When you look at the three major themes that are hitting energy right now, the desire to continue to evolve our energy systems, replacing coal with natural gas, major theme. AI is what everybody's talking about right now. That's going to be a major source of demand. And then providing energy security to our allies is still a thing, and that's going to be playing on the LNG. You step back and you add it all up, we're talking about a 20 to 40% increase in natural gas demand in this country.
Well, let me just ask you, because before that, let's go back. That's longer term. But I know our BI people have put some research, and they talked about North American gas is at an inflection. And they talked about AI data centers adding to domestic demand near Appalachian supply, while LNG exports sustain global pull. But so tell us about the shorter term. Is there a little bit of an inflection point for you?
Well, I'd say the next 3 to 5 years, data centers and fueling the AI revolution is going to be a very big focus. But keep in mind, we're going to be doubling U.S. LNG exports over the next 5 years. So we're doing both of these at once. And the good news is that we've got the natural resource in this country. It's just going to come down to how fast we can actually get this infrastructure built, focusing specifically on the power demand side of things. When you step back and look at electrify everything, not just AI, we're looking at a 10 to 18 BCF a day natural gas demand to meet that. That's a 10 to 18% increase in demand, and about 40% of that is going to be for data centers. So this is going to be really big. We're seeing these opportunities happen in our backyard. EQT, we signed up over 1.5 BCF a day of natural gas.
Billion cubic feet.
Billion cubic feet, yeah.
Just for those who might not be.
And this is a market that's about 100 BCF a day, just to make the numbers ballpark. So 1.5 BCF a day of natural gas supply for these data centers in Pennsylvania. This is going to generate enough power to almost power 2 New York cities. So these are major league infrastructure projects in a grid that desperately needs more power generation.
The tech companies like to talk about nuclear power generation powering their data centers. The president likes to talk about the promise of nuclear power. And I say promise of it because we know how to do it, but it just takes a long time and it's very expensive. How do you view the increased interest in recent years in nuclear power as a threat to your business?
I think that natural gas is the clear winner right now. You know, this has been a big question that people have been asking over the last, call it 18 months. What is going to power this AI revolution? What was originally thought to be renewable is going to pick this up. Then people went to nuclear and realized it's going to take too long to get it done. Comes back to natural gas. Why? Because we have the track record of scale and speed. If you look over the last 10 years, we've seen natural gas power demand increase 14 BCF a day. So think about how much we're planning on doing. We've done that with natural gas. Now, longer term, we think nuclear is going to be a great option, but understand this, natural gas has a vehicle to become zero carbon, and that's why we're spending a little bit of money today on carbon capture that will enable natural gas to be the first reliable, affordable, zero carbon energy solution. The world does not have that today.
You know, just like there's a big spend in AI and data centers, there seems to be a big spend in that energy to support it and what's needed. You have announced multiple long-term sales and purchase agreements, I think just in the last few months. Some are fearing an oversupply, Toby, in 2027, 2029. What are you hearing from LNG buyers about kind of your demand visibility window, and how confident are you? It sounds like you're pretty confident on the longer term pull for LNG, or US LNG specifically.
Yeah, on the LNG front, we certainly wouldn't disagree. We do see a little bit of an oversupply situation globally for LNG that could lead to softer prices in that 27 to 29 timeframe that you mentioned. And you say, well, Tobe, why did you just go and sign up for a massive amount of LNG? It's because our contracts are going to be starting. We're going to be getting that exposure in 2030. So this oversupply will pass, and then we're back to a tight situation. And that's where LNG is hitting the market. When you want to talk about demand, just step back and look at this world. For a world that's going to continue to care about climate and emissions, replacing the coal in this world is going to require an additional 170 BCF a day of natural gas. If you care about the people living on this planet, it's going to take an additional 120 BCF a day.
How sure are you that people care about that? We are certainly feeling this year a pushback.
Well,
when it comes to concerns about carbon emissions and climate.
Yeah,
not from everyone, and I have to be very careful because there are a lot of folks that are working really hard on this area.
Yeah,
but how confident and comfortable are you?
On the energy transition, there's a ton of people that are passionate about this, and that passion's not going to go away with just one election. But I think what is happening now is people are stepping back and they're looking at the plans they put in place, and they're looking at the results of those plans. And what we're seeing is that Americans' energy bills are up over 35%. Now, renewables is not to blame for all of that. We've had a massive infrastructure cancellation movement that's prevented us from getting energy infrastructure built. That's the root cause of this issue. But when you step back and look at how big of an impact this has had, we spent over $2 trillion on renewables last year. And to put that in perspective, we spent over $1.3 billion in oil and gas. The energy solution that provides—
say that again?
$2 trillion in renewables.
What do you mean we spent?
The world.
Okay.
Invested over $2 trillion in renewables.
And build out and—
Yeah, and then for comparison, oil and gas investments that provides over 80% of the world's energy, we invested over $1.3 trillion. So this has been a very big theme, but it's coming.
So this shows to you that people this is the future, is renewables. That's where they're spending money? Is that what you're saying?
If you went by where people were spending money, that does not necessarily mean what's going to be the future. The future of energy is going to be the energy solution that is affordable, reliable, and clean, and has all three of those attributes in check. I think the energy transition maybe has prioritized the clean aspects of energy, but as we're seeing right now, Americans are scratching their heads looking to see the record amounts of energy investments that we're making, and the record amounts of energy production in this country, and their energy bills are up 35%. They're scratching their heads. Why is this happening? It's because the solutions that we're putting on the field need to be the right solutions, and that is natural gas.
But it's also because, as you said, the demand has gone up. For years, it was kind of flat, it was stable, and then we saw this huge increase in demand for power here in the U.S. So demand has a lot to do with it too. Well,
demand hasn't really started to pick up just yet. We're coming out of it. I think we're looking at massive growth prospects. But this really is a repercussion from all of the not underinvestment in reliable infrastructure over the past decade. Now, this country, in America, since 2018, it's become almost impossible to get a pipeline built in this country. We own an asset called Mountain Valley Pipeline. It took an act of Congress to get that pipeline built. So infrastructure has been incredibly challenged, and that has really strained markets and really put some stress on the system.
So let's talk about those challenges. Are you having constructive conversations, or are you having any conversations with the Trump administration, representatives from the Trump administration, to try to ease those regulatory delays?
So this administration truly understands how important affordable and reliable is in the energy equation. Secretary Wright, fabulous, he really understands energy, all forms of energy. So I think we're going to have some practical approach towards energy solutions that we put in place. But that being said, the executive branch is not going to dictate the types of energy that we put in this country. We're going to need Congress to act to pass meaningful permit reform so we can get back to letting the most cost-effective, reliable, cleanest form of energy.
Do you consider wind power a form of energy?
Absolutely.
It doesn't seem like this administration supports that.
Yeah, I mean,
is that a mistake?
Well, I would say it's as a sponsor of a pipeline, Mountain Valley Pipeline, that has been subjected to tremendous political force. This is a situation where I think we would be in a much better place if we would let market forces dictate the energy that makes its way to the playing field, let political force take the backseat. Unfortunately, we are going to need some help from our leaders in Washington, D.C. I hope they notice that we've got a massive demand surge coming. We do not have the right infrastructure set up right now. We need to do a massive build out. And just for people to understand the race that we're in right now, this is a national security threat for us. We have got to win the race for AI. And right now, how we're faring in the U.S., where we put in 6 gigawatts of reliable power generation this last year, China put over 60 gigawatts of reliable power gen, most of that coal. So we are not keeping pace. We need to do a lot more.
Just want to go back to cost. Just because it's cheap, and I understand there's other parameters that you're putting in there. I mean, there are nat gas, there are leaks and so on and so forth that do impact the environment. So it's not the cleanest and purest. There are problems with it. And I just wonder if we're always constantly chasing the cheapest thing out there, that's not necessarily a good thing. And just bring up all the manufacturing that we've put outside the United States just because it was a cheaper good, that we're finding maybe that wasn't such a good strategy. So I just want to bring that back to the energy sector, that maybe sometimes things have to be expensive to get to a really, really smart solution.
I think we need to take a holistic approach when we're looking at energy, and we need to look at the balance between cost, reliability, and the carbon footprint associated with that energy. That's why when we look at those attributes for natural gas, that's why we believe that this is the energy solution of the future. When you look at regions that ignore and just over-prioritize the clean aspects of energy, you have situations like Europe, and we've seen what's happened there. It's been a crisis. Thank goodness for America and the energy that we've been able to provide them to get them through this with our LNG. So it's got to be a balanced approach. It's not all going to be about cost. It's not all going to be about reliability or carbon footprint. It's got to be a healthy balance of three. Right now, we need to get back to the affordable, reliable.
Speaking of balance, and I just want to go to your balance sheet, because there is a spend, right? Everybody's doing it because they are chasing this AI spend and trying to be there in terms of support. You guys have talked about working down to a 2026 year-end debt target of $5 billion. I think that was after the Equitrans deal. Tell us about what you're considering to help prop up your balance sheet. Just got about 30 seconds.
3 seconds?
30
seconds. I'll tell you what our priorities are right now. Ensure the reliable production of energy. Right now, we produce a little bit over a million barrels a day of energy.
So anything that you need to do to meet that, you're not worried about the spend
for maintenance
or the debt?
For maintenance volumes levels, we're going to be reliably providing the future by signing up these growth contracts, both on LNG and the data center build out. And from a cleanliness perspective, we've already made the investments, and we've already slashed our methane emissions. We've got one of the best environmental programs going.
So it sounds like the spend and the debt's okay for now.
Yes.
Okay, gonna leave it there. Toby Rice, President and CEO of EQT. When we come back, we get another view from the C-suite. We talk with the President and CEO of Siemens USA. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. Traders defying calls to take a breather after a $15 trillion stock market rally from those April lows. Nvidia boosting optimism today on artificial intelligence. Right to the numbers with the S&P right now up 30. That is a gain of almost 0.5%. The S&P now at 66.94. The Dow up 71, also at a record, up now by about 0.1%. The NASDAQ Composite Index up 159 for NASDAQ, a record there as well, up 0.7%. 10-year 4.13%. Gold up $60. The ounce up 1.6%. Bitcoin down 2.2%. 112,875 on Bitcoin. Nvidia is going to invest as much as $100 billion in OpenAI to support the building of new data centers and the infrastructure needed to power AI workloads. Again, Nvidia shares, they are rallying today. Nvidia up by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Think wind turbines, power generators and transmitters, industrial motors and gears and motion sensors. And based on a conversation we were just having off air, even crypto and blockchain.
They're all related.
They are.
You got to have power.
You do.
To mine that crypto.
To make it all happen. But anyway, bigger picture, you get an idea of what Siemens USA is all about. As the company shared with us, the USA unit employs about 45,000 employees, 50 states and Puerto Rico, and generated $21.1 billion in revenue in fiscal year 2024. Back with us, delighted to have with us, Barbara Humpton. She's president, CEO of Siemens USA. She's here in studio. How are you?
Carol and Tim, I'm thrilled to be here. So thanks so much for the invitation.
Well, it's great to have you here, and there's a lot to get to, so much coming at us. Macro, though, I always like to start your view on the environment right now.
Yeah, right now, what I see is a huge emphasis by business in making sure that we are protecting our future. We know that it's in our long-term business best interest to make brilliant use of resources, make sure that we keep the future whole and ready. So this is what Siemens has been working on. Siemens' business strategy is actually built around global megatrends. And so creating technologies...
But there are megatrends that can drive you crazy and you can't take advantage of, or not right away. And there are megatrends that are like, whoa, let's do it, let's run.
Or there are mega trends that aren't necessarily aligned with the views of a presidential administration.
Exactly.
And that makes it more challenging.
But it's hard to argue with things that are inexorable forces.
Like, for
example, we know the climate is changing. We know that people everywhere are aging. We know that everywhere more and more people are living in cities. Siemens brings technologies that transform the everyday, enabling us to really live, manage, and thrive in changing circumstances.
So we're going to continue with energy here, and that's where I want to start. Carol mentioned wind turbines, but here in the United States, the president has made clear his view on wind power. How much of a setback has that been for Siemens USA?
Well, I will clarify that my colleagues at Siemens Energy obviously have taken that on, and you've seen Siemens Energy thriving over the last year. At Siemens AG, the U.S. entity I'm responsible for, once those electrons are generated, we're the ones who are moving them. Medium voltage, low voltage, we're the ones working at the grid edge, which I think is where there's so much fruitful development to be done. So yes, and I just loved your last interview. We need more power. Everyone understands we do. There's just insatiable demand for electrons. Actually, we're agnostic about how those electrons get generated. What we want to do is move those to where they're used best. Think AI data factories, think the kind of data centers we've been building. Think about manufacturing coming back to the United States. All of those are brilliant uses of the power that we can generate.
What can you tell us about the AI build out and what you guys are seeing firsthand?
Well, it's massive. It's massive. It is critical for the U.S. to maintain leadership in AI. We also know that one of the most exciting things that will happen is AI at the edge. So you can think about a manufacturing location as a humongous generator of data. Every factory is producing just massive amounts of data, more data than any individual could make sense of. But when you bring tools like our industrial AI Copilot into the manufacturing environment, it allows users to harness that data, make better decisions, really drive their operations. And we're seeing success all over the place.
What does it mean? Give us an example. So you bring the Copilot into what factory or whatever, or what plant facility, and it does what?
Well, so the first thing it does is makes it possible for mere mortals like you and me to actually interact with automated machinery. Instead of having to know the programming languages, we can speak in natural language and have the AI translate into the programming language of the manufacturing equipment. That allows us to employ people who maybe previously thought, I could never get a job in manufacturing. I don't know enough. I haven't had enough background in it. But now we can, I'll tell you that we have operations in Fort Worth, Texas, where we're actually building the electrical components that go into data centers. And with that incredible demand,
right?
The switchboards that manage that electricity, we needed to hire 700 people to work in the plant. And the local management said, let's hire retired principals and teachers first. Let's create an on-site training program. And now we have, former pizza delivery guys, former chefs, former checkout clerks are rock stars in the manufacturing environment.
You talked about the tool that your customers use when it comes to AI being a co-pilot. What about internally are you doing since we last spoke when it comes to AI?
Oh, boy. We are in that era when no one knows where this will go. So the encouragement at Siemens is for everyone to lean in, start learning. get familiar, get comfortable with using AI. And my favorite thing at the end of a business meeting, let's say we call the meeting ends 5 minutes early, I turn to the team and say, what are you doing with AI? And I've heard the most amazing things, like the finance team who said, well, we just generated the balance sheet that we just reviewed with AI.
So it's much more informal than it is formal right now.
It is, and I'll tell you why. It's important that we learn. And some people would say, oh, no, I want to control that. I want to make sure that we're sharing best practices. Yeah, all that's good. But first, let's push the edges and see what we can do.
Do you think AI is going to make us all idiots?
No.
Because I think about what you said about anybody who doesn't even know the coding program can get there and talk and have a conversation. And I have this fear that we're just going to rely on AI to do everything.
Don't be afraid. Here's what this does.
I'm not afraid, and I've played with it, and I'm blown away with it. But I also can see how, as it gets smarter and smarter and smarter and more specific in terms of fields, that it can do a heck of a lot.
It will make you more and more powerful then as you go. So think about AI as that super tool that will take the least among us, those with the least amount of background and expertise, and give us the knowledge and power to perform at a higher level.
Yeah.
This is going to be so exciting to see then, what do experts do with this additional power? How far can they push?
Makes me wonder if we're going to need sophisticated workers from outside the U.S.
Perfect segue to talk about H-1B visas, because that is where we want to end. We're trying to ask everyone we talk to about what's stemming from the confusion Friday and through the weekend. How do you use H-1B visas at Siemens USA?
Yeah, we do. We bring people from all over the world who have special knowledge in things that we're, today I would say less than 5% of our population in Siemens USA is folks on H-1B visas. But that's a number. That's a great number.
Yeah.
And the point is that we're global. What we're working on is making sure we share lessons learned, bringing people to the U.S. for experiences, and then obviously sharing their knowledge with workers.
Is that at risk with a new potential $100,000 fee associated with these visas?
It'll factor into the business case analysis.
Would you still have 5% of your workforce have these visas at that cost?
We'll have to see. I want to see how this develops, and we are working to make sure, first of all, that our employees are in good shape, that they're able to travel and really accomplish the mission.
Is the reason you have those employees because you cannot find those employees in the U.S.?
In some cases, it is. In some cases, it is that we want to give people the global experience that's going to really make them more effective in understanding, here's what the U.S. can produce as we address markets elsewhere.
You said you're going to do the financial analysis. Could it mean that $100,000 fee, if you guys want those workers, that it's going to feed into costs and higher costs of things? Just quickly.
I think this is going to be part of an ever-changing equation. Our labor costs obviously are a big portion of what we do at Siemens.
Right. And
so this is, I would tell you that our export controls colleagues have been our heroes this year.
I bet they're on speed dial. Barbara, thank you so much. Barbara Humpton, President and CEO of Siemens USA, joining us right here on Bloomberg Businessweek Daily. When we come back, quick check on the trade and stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, coming up on the last hour of trading on this Monday, September 22nd, 2025. Carol Massar, Tim Stenovec. Hey, we've got a rally underway, and we're looking at records on the S&P, the Dow, and I believe the NASDAQ 100. Up about 30 points on the S&P 500, 6693. Dow Jones Industrial Average, a gain of more than 80 points. It is at 46,398. NASDAQ 100, Tim, up about 0.5%, 137 points to the upside. So it wasn't like this a few hours ago, but we've just been building momentum and pretty much hovering near our highs of the session.
We're also getting a view from another company later today. Firefly Aerospace is reporting earnings after the bell. This will be their first earnings report as a publicly traded company. So we got an eye on that one.
Looking forward to that. I'm Carol Massar, along with Tim Stenovec. Let's get to some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Graffeo and Nvidia. Yeah, it's moving a little bit.
It's moving a little bit. When we have a company this big, a little bit in percentage-wise is a lot of billions of dollars moving. But I'm watching Nvidia, ticker NVDA. It hit a record intraday high today, above $184 a share, currently up about 3.5%. After the chipmaker said it plans to invest $100 billion in OpenAI, which of course is the parent company of ChatGPT, and it's going to be used to support new data centers and other AI infrastructure. I feel like we were just talking about Nvidia making partnerships. It was just Friday, right? That Nvidia agreed to invest $5 billion in Intel. Well, now $100 billion are going to OpenAI. The street's been pretty positive on this.
You get a billion.
Listen,
you get a billion.
Exactly.
Listen,
Or
the
five
billions
or
are
100.
not the billions are not unlimited at Nvidia. The company
Right.
has $56.7 billion in cash and cash equivalents on its balance sheet.
Well, they just committed $100 billion to OpenAI.
So how does that work?
It's a letter of intent.
How does
which
that
means
work?
I intend to do this, right?
Yes.
But we'll see in reality.
And Nvidia will also be receiving, and it's going to happen. It's not going to be in $100 billion all at once, from my understanding. Bloomberg is reporting that Nvidia will receive equity in OpenAI as part of the deal, according to people familiar with the arrangements. And the goal here is to deploy at least 10 gigawatts of Nvidia systems for OpenAI infrastructure. I thought it was interesting what CFRA had to say. They upgraded the stock to strong buy. They already had a buy rating, moved it up to strong buy.
I really, really like it.
Exactly. And they said, the analysts over there, the combination of the OpenAI partnership and a potential re-entry into China at some point, among other factors, has the potential to still drive notable upside to our assumptions
That would be
in the
big.
stock and Nvidia.
China, right?
Yeah.
Wow.
Cool. Where you want to go?
I want to go to Oracle.
Let's go to Oracle.
Okay, so this is another tech stock that's moving higher today. Ticker ORCL. Jumped up about 5% right now, and it's all on optimism about the software firm's role in a potential deal for TikTok. So Bloomberg reported that a White House official said Oracle would recreate and provide security for a new U.S. version of TikTok's algorithm under that deal taking shape to sell Chinese-owned TikTok to a consortium of American investors. That seems to be moving the stock. There is also some Oracle specific management moves they did promote to executives to become co-chief executive officers. I think I'm going to butcher this name, Tim. I don't know if you could say this. Clay Majoric and Mike Silica will become co-chief executive officers.
Well done.
I'm getting the thumbs up.
Well done.
Okay.
Well done. Yeah, that wasn't planned, was it? The executive changes? I don't think so, right?
Yeah, my understanding is it's not. Analysts were largely positive on it, though.
Well, don't forget, Safra Catz was co-CEO with Mark Hurd years ago.
Right.
And then Mark Hurd passed away, I believe, in 2019. And then Safra Catz was the only CEO. Larry Ellison at the time said he would keep her as the only CEO. And now, two CEOs again.
All right, so going back to that plan. All right, Oracle we're watching. That one's rallying. BETR. Who's that?
We're going to end on a fun note. Can I call it fun when a stock is moving in the triple digits?
Anytime we talk about Eric Jackson, I think it's interesting.
It's fun. Okay.
Oh, I saw this one.
Yeah, so this is a digital, like, online home services company.
Yeah.
They do online mortgages.
Yeah, you can refi your home online.
Yes. The ticker is BETR. It was up as much as 175% today. That wasn't even a record because it was up as much as 200% back in 2023. And it's all after a Canadian investor that I know you guys have spoken to, Eric Jackson.
Him a lot. Yeah, he used to not be a meme stock guy either. Like, he's got a tiny hedge fund in Toronto.
Right. EMJ Capital, he tweeted that he's long on Better, and he called the company the Shopify of mortgages. You know, in reading about him, I get a sense that he is kind of accidentally in the meme stock mania.
I think he has harnessed the power of social media, and he has seen the power of social media.
I think
and
so too.
He's gained a big following.
And now suddenly we're seeing meme stock volume in this company, and meme stock moves here in Better Home.
It's an $842 million market cap right now, even with the increase today.
Yeah, and it did pair those gains, but it's still up about 60% today. And of course, this follows Eric Jackson's move on Open Door Technology, sparking a meme stock style rally in that stock a couple months ago.
Love it, love it. Check out our Stock Movers podcast, 5-minute episodes. Find it on Apple, Spotify, or anywhere you get your podcasts. On TV, the close coming your way as Tim and I continue on Bloomberg Businessweek Daily.